Now I'm going to talk about the failures, and this is actually one of the more important chapters of the entire price action course, to be very honest with you, especially when it comes to the core concepts. My trading system, my way of trading is pretty much revolving around failures, because if you can understand failures and you can also easily identify failures, then you pretty much understand the game, because you can identify with the naked eye, you can identify liquidity. Liquidity is equivalent to fuel for the market, for the big mans, for the institutionals, for the banks, but that's something that I will discuss in one of the upcoming videos. When it comes to failures, a failure means that the price fails to continue with the current trend, so to say. Okay, obviously you need to understand, with the way we have built this price action course, all the videos prior to this one is just, I'm just pretty much building or giving you blocks. Okay, I'm laying the foundation step by step, so we know what an uptrend is, a downtrend, we know what a move to the high, a move to the low is, reversals, continuations, etc. So a failure is obviously also a very key point or a component within the strategy. So hypothetically speaking, let's say we are in an uptrend. I'm just going to visualize this. Okay, again, please do understand as well, price action, it revolves around logic, or it's very logical. Whenever you're in an uptrend and you're holding levels as support, okay, these horizontals, they represent the so-called level to hold. It's a very simple equation, so to say. When you're in an uptrend and you're holding levels as support, you can make the assumption, never work with guarantees, it's always a probability, but we keep on speculating to a certain extent, hence the reason it's a probability, even though the market, at the end of the day, is the market's responsibility or the market's decision to do whatever the fuck they want to do, but we always want to work with so-called assumptions. Okay, so first of all, we are in an uptrend, price keeps going from lower to higher. Second of all, we hold levels as support. So if we are in an uptrend and we hold levels as support, then we can simply expect price to keep on rising and go up. But what happens? For example, when price fails to create new higher highs and immediately dumps and breaks levels, then this usually is what we can consider to be a failure, because it pretty much deviates from our assumptions. The market is not behaving as we expected it to do, okay? Because we were initially in an uptrend and we were expecting price to rise, surge and go to higher prices, but it fails to do so. Hence the reason you're creating a failure, or hence the term, the failure. And then suddenly from this point onwards, we go down and we go to lower prices, okay? That's very important to understand. And in this case, we can make a differentiation between a so-called failure to lose or failure to gain. A failure to lose means price fails to continue rising, and from that point, it breaks levels. And a failure to lose is price fails to continue falling, and from that point, it gains levels. This one, it loses levels, in order to make the clarification a bit better. So this is a so-called failure to gain. We were expecting higher highs, but we failed to do so. And then usually whenever price comes back to this exact point, that's where the actual trading setups come from. And this is also vice versa. So this was a failure to gain, but then obviously we can also create a so-called failure to lose, and this is applicable for a downtrend. Normally speaking, whenever we are in a downtrend, we would actually want price to gain first, then come back, and then from that moment, go up. However, sometimes you have a level to gain, which is equivalent to a move to the low or a swing high, whatever term you want to use. Normally, again, we would want price to gain it first and then come back. But sometimes it can also happen that price doesn't get above first, create a so-called, and this is something that you never know in the moment itself, on the moment supreme, so to say. But normally speaking, if you're in a downtrend and you fail to get above particular levels, then you can simply expect price to keep on going lower, right? That makes sense. But then, instead of going lower and creating a new lower low, from this point onwards, and that's again the market to decide, you go up. This is then what we consider to be a so-called failure to lose, because even though we didn't get above the level first, we didn't create newer lower lows. And this is very important to understand. This is a failure to lose. And then whenever price gets to this level or this support level, support zone, then you go up. So this is very important to understand. A failure to gain and a failure to lose. It's pretty much an anomaly. You're deviating from the expectation, okay? What you can normally expect from the market. So if we are going to apply the theory into practicality, I do need to find something very clean, maybe perfect, on gold, okay? I'm going to apply the replay tool. So even though we have already pretty much seen the outcome of the candlesticks or the price action, so to say, just bear with me and let me create my story. So in this case, this obviously is what we can consider to be a move to the low, because from this point onwards, we simply create newer lower lows, okay? That's visibly reflected or visualized in the candlesticks. Normally, you want price to go up and then get back to change the trend. However, what happens? As you can see here, this is so nice. This is a perfect example. This point, what do? Price touches the level, but normally speaking, usually when you have a so-called move to the low or a swing high and price is rejecting from that particular level, normally that should result in lower prices, normally. You can make the assumption that price can normally create lower lows because again, we are in a downtrend, okay? Very simple. We are always applying logic on the candles or on the chart. That is very important to understand. But then again, what happens? Instead of creating new lows, okay, lower than this, you're deviating from the expectation or the assumption that you made. And then from this point onwards, we suddenly increase, we suddenly surge, we gain levels. And how do we gain, or how can we identify that we are gaining levels? Then again, all these puzzle pieces, they are pretty much coming all together. It's going a little bit faster now. 1 candlestick, 2 candlesticks, 3, 4. In short, that's a perfect confirmation of a gain. Voila. So whenever price happens to get back to this level or this zone, so to say, and again, this is a failure to lose, then obviously, whenever price happens to go to this point, this is where the so-called liquidity within the chart rests. And the liquidity, that's something that you want to take into your advantage, or that's something that you want to benefit from. And that's how you pretty much can come to perfect trades. Look at this. Beautiful. Beautiful. This is a perfect example of a failure. However, it works both sides. It works both ways. You can have a failure to lose, but obviously you can also have a failure to gain. So then let's try and have a look. Ethereum, I guess. Okay, so over here, this is actually a nice example as well. Okay, what happens? And there are actually multiple failures being created within the range, so to say. In this case, it's quite clean, okay? Even though we are creating some local structure, we have to always make a differentiation between specific price action. Again, as I mentioned, even though I'm repeating myself a lot of times, it's very important to understand, okay? Because again, it all revolves around logic and just applying it on the chart. Even though all these candlesticks are somewhat important, we need to make a differentiation between the relevant and the more important price action. We can clearly see that this particular level, 3,527 on Ethereum for our chart, this is what we can consider to be a move to the low, okay? Because from this point onwards, you can see the price, when we follow the red candlesticks, that we are aggressively dumping and creating the so-called lower low within the entire price action area, so to say. But then again, normally speaking, what happens? As long as we can't get above this particular level, as in gaining the bigger move to the low, we can just very simply make an assumption that price goes lower, because this is higher time frame, of course, and that's just normally how the market reacts or works, okay? As long as you created a move to the low and you can't get above it, you can simply make the assumption that when you're in a downtrend and you can't gain levels, you go down. Continuation down. That's the whole point of a downtrend, okay? But what happens? What happens? we gain, okay? We suddenly gain levels, okay? So from this point, we created a, let's say a local move to the high. This is a move to the low because we aggressively dump and create a lower low within this area. And then from this point onwards, you can clearly see when we follow the green candles, we can see a surge where price increases, okay? And this is what we can consider to be a move to the high. But then again, you need to understand as well that this point from here to here, when we are also gaining levels, we are actually deviating from the expectations because we couldn't expect this to happen. Okay, normally we would expect lower prices, but we are deviating from the expectations because suddenly from this point, we start gaining levels. 1, 2, 3, 4, 5, 6 candles. In short, that's a confirmation of a gain. So where is your liquidity? Pretty much around the same exact zone. And this, if you start identifying these so-called failures, that's where you can come to very beautiful trades. Because as you can see, it touches the box, it touches the zone, you get a beautiful reaction. That's a beautiful trade. Obviously, there are no follow-ups. Eventually, we will dump, of course, and go all the way lower, but that doesn't mean that it's a bad trade. It's a beautiful trade, beautiful reaction, beautiful move, and this is most definitely something you need to start recognizing. However, what happens? A lot of stuff is happening within this very small area. So we had a move to the low. Let me just delete this one for a quick second. Normally, we could actually say that, hey, this one deviated from the norm. We were gaining levels. So right now, instead of expecting lower prices, as long as we hold this particular level or zone as support, the level to hold or the move to the high, whatever you may call it, we can actually consider price to go up. But then what happens? Even though we get a reaction, unfortunately, price fails to give a follow-up of the move. And here you deviate, okay? Because we were initially expecting to go up because we are holding levels and we were gaining from this point, but we are deviating from the norm because we were normally expecting higher prices to be seen, but that's not what's happening. And from this point, we are aggressively losing. So this is actually something that we can consider to be a failure to gain. Every single time when you can identify the failures, whether it be a failure to lose or a failure to gain, that's where the magic happens. That's how you can make money.